What's going on, everybody? Ryan Thompson, the Assumable Guy. This is the Assumable Guy Show. Today, we're answering a question I get all the time. Do I actually need a real estate agent to assume a mortgage? If you're a buyer thinking about doing one of these on your own, this one's for you. Let's get into it. So here's the quick answer. No. Technically, you don't need a real estate agent to assume a mortgage. There's no law that says you have to have one. You can go find an assumable property, contact the seller, and start the assumption process yourself. You absolutely can. But should you? No. And I'm not just saying that because I'm an agent. I'm saying that because I've watched people try to do this solo, and it almost never goes well. Let me explain why. First, let's talk about finding these properties. Here's something a lot of people don't know. Only 25% of assumable properties are actually tagged as assumable in the MLS. 25%. That means 75% of the assumable mortgages out there you're not going to find on Zillow. You're not going to find them on Realtor.com. You're not going to find them by scrolling listings on your phone, right? So how do you find them? That takes work, serious work. My team maintains a list of over 1,200 assumable properties across Colorado. We've got a virtual assistant finding 2 to 3 new properties every single week using custom scripts. I personally call listing agents to find out which VA sellers are willing to leave their entitlement with the property. Those are the hand raisers, and about 10 to 20% of VA sellers say yes to that. But you don't know which ones unless someone picks up the phone and asks. Now here's the thing. If you're doing this on your own, you're searching through the same 25% of listings everyone else sees. You're missing 3/4 of the market. That's a huge disadvantage before you even write an offer. All right, so let's say you somehow find a property. Now you've got to deal with the listing agent, and this is where it gets real. Most listing agents don't understand assumption mortgages. I promise you, most of them don't. They hear assumption and they think subject to. They think it's some shady workaround. They think their seller's loan is going to get called due. None of that is true. But if you don't have someone on your side who can educate that listing agent, your offer is going in the trash. My radar is always up when I'm talking to listing agents. If I even get a whiff of them confusing assumptions with subject to, I stop them right there. I walk them through how it works. I empower them so they can go to their seller and explain it confidently. Because here's what happens if they don't understand it. They shut it down. They don't want to look stupid in front of their client. So they just say no, and you lose the deal. Now think about the offer itself. Think about that for a second. An assumable mortgage offer is not like a normal purchase offer. There are specific clauses that need to go in there. Assumption-specific deadlines. Protections for you as the buyer. What happens if the bank drags their feet past 90 days? What happens if the assumption gets denied? All of that needs to be spelled out in the contract to protect you. I put all the correct assumable clauses in there, the deadlines in there to protect you. If you're writing this offer yourself, or if you've got an agent who's never done an assumption before, you're leaving yourself exposed. That's not where you want to be on a transaction this important, right? Then there's the negotiation side. And this is where having the right agent really pays for itself. Let me give you a real example. We had a buyer get into a property, $430,000 home, 2.99% rate, and the total cash to close, $16,000. That's it. $16,000 to get into a $430,000 home with a rate under 3%. Plus, we negotiated $1,000 in concessions on top of that. That doesn't just happen. That's strategy. That's knowing how to structure the offer, how to position the assumption as a benefit to the seller, how to get concessions when most people don't even think to ask. An agent who does these every week knows how to make that happen. An agent who's never done one is guessing. Here's another one. We had a deal with a 2.375% rate, 2.375%, and we got the seller to work with Climb Credit Union for a second mortgage to cover the equity gap. Plus, we negotiated $7,000 in inspection resolution, so the buyer didn't just get a killer rate. They got help covering the gap and repairs handled. Try doing that without an experienced agent in your corner. Now let me talk about the banks for a minute, because this is the part people really underestimate. The banks are adding friction to the process. They've got a 2% interest rate loan on their books. If they make it difficult for you to assume it, then that home will be sold the traditional way. That loan will be off their books, and they can reloan that money at 6.5%. They'd much rather do that, right? So the bank is not on your side. They're going to ask for paperwork over and over again, things you've already given them. They're going to drag their feet. They're going to make it annoying. And if you don't have an assumption processor involved, someone who holds the bank's feet to the fire, things can fall apart. These processors know how to make it efficient, give the banks what they need, and tell the banks this needs to happen or you're going to get in trouble from the government that's backing these loans. The nuclear option? Should we get FHA or VA involved? And the lender will instantly get in gear. Now, I don't do any of these without those processors. They're well worth it. But here's the thing most people don't realize. You've got to know which processor to use, how to coordinate with them, and how to keep the whole deal moving while the bank adds friction. That's what an experienced agent does. We've done this enough times to know when the bank is stalling versus when there's a real issue. Big difference. Now, sellers, here's what this means for you. If you're selling a home with an assumable mortgage, you want a buyer who has representation. A buyer without an agent is more likely to make mistakes in the offer, miss deadlines, or bail when the process gets frustrating. A buyer with an agent who specializes in assumptions, they know what they're getting into. They've been prepped on the timeline. They're not going to panic when the bank asks for the same document 3 times. That protects your deal too. So back to the original question, do you need a real estate agent to assume a mortgage? Legally, no. But practically, I want to make this super clear. Trying to do this alone is like doing your own dental work. You can try, but you're going to wish you hadn't. You need someone who maintains the list, who calls the agents, who knows the clauses, who coordinates the processors, who fights the bank on your behalf, and who's done enough of these to know where the landmines are. That's what we do every single week. Let's go get some sweet deals. I'm Ryan Thompson. This is the Assumable Guy Show. If you want to see if an assumable mortgage makes sense for you, go to assumableguy.com or DM me on Instagram at the.assumable.guy. I'll run the numbers for you. No pressure, just math. Next episode, we're getting into what happens to your PMI or MIP after an assumption. If you're a seller wondering whether that monthly insurance payment follows you or stays with the loan, you're going to want to hear this one. See you on the next one.